So where is crypto headed? Where is the stock market headed? Where is everything headed after the big Trump announcement, after the Federal Reserve made their big speech as well? And by the way, did you know that the Magnificent Seven stocks are all in the bear market now? That's official. The Magnificent Seven stocks of the United States are in bear market right now. But does that mean the NASDAQ, the Spider, the SP 500, and Bitcoin and crypto are all going to bear market? I don't quite agree because, they still haven't hit their 20% drop yet. That's what it needs. Today's episode, I'm going to explain to you guys why the Federal Reserve did not cut interest rates and why they don't plan on cutting on interest rates, even though there's some panic and fear about the recession situation in the US. And I'm going to explain to you guys where Bitcoin and crypto is headed over the next few weeks. So first, dare I say, this is the most important chart in the world right now. That's the SP 500. And if you are a Bitcoin or crypto trader, you'll be pretty dumb to ignore this chart. As we can see, as soon as the sell-off started happening, that's when Bitcoin dumped. Bitcoin actually front-run it like a couple of days before, right, the dump in the SP 500 or the Magnificent Seven, which is in bear market right now. And that's why Bitcoin's down something like 30%. So from the top. So basically, you know how if you trade altcoins, small or mid-cap altcoins, you always want to know where Bitcoin's going. Why do you want to know where Bitcoin's going? Well, because Bitcoin is the much larger cap. It's like makes up 50%, 60% of the market. When Bitcoin moves up, then chances are your small altcoins are going to move up. If Bitcoin crashes, then chances are most of your small altcoins or all of them are going to dump. Same thing here. Bitcoin is so small compared to the US stock market and the US bond market. I've explained this many times, and we're going to have a look at what the US stock market is doing and then what Bitcoin is doing and why the Federal Reserve isn't cutting interest rates. But before we do, let's first just spend 30 seconds to answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses this crypto exchange that is non-KYC. That means you don't need to show any ID, which means the Americans can use it because they can't even see you're American. That means the IRS can't see you, the tax office can't see you, the CIA, FBI, nobody can see you. And I made a deal with them for newbies joining. It's over $8,000 US of benefits just for trading and for joining up. It's already over 1.3 million users in the world, the largest non-KYC exchange in the world. So for folks who are watching this on YouTube, the link is in the description below. The link is in the description below. But for other folks who are watching it on, for example, like this platform, then basically just go to my profile page and it's on the Stan link right there. Basically the first thing that comes up. So just keep in mind, guys, it's only on the link that Pablo is providing, only on this link that Pablo is providing. Okay, thank you guys. Let's get back to Bitcoin. So Bitcoin's enjoying a bit of a bounce lately, and like I told you guys, that's because the SP 500 is bouncing. I know a lot of people don't want to hear that, but how do you explain this? Like, it literally is because the SP 500 is bouncing. It was crashing because the SP 500 was crashing. So it's bouncing off this channel, the green channel here, and I said 550 would be strong support. And nobody else called this because it does not appear as a support on any other charts, but appears as a support on my chart because, I've drawn this rising green channel. And then I said 565 on the spider is a big resistance, and that's exactly what we're getting here. So we're seeing rejection at 565. Now we close out the week tomorrow on Friday, and I'm talking about this on a Thursday trading hours. So if we get a solid close above on the weekly, then I would think the next target is 585 area. But if we get shut down here, then we get another test of the 550 area. So now let's look at a Bitcoin. Oh, before we do, let me show you guys a chart that explains why the Federal Reserve is not cutting interest rates. Okay, this will be cool. Check this out. So the chart I'm going to show you is called TLT. Can folks tell me what TLT is? TLT is basically, as it says here, the 20-year Treasury bond ETF. It's basically US Treasury bonds that have been around for 20 years, that have a 20-year maturity or duration. And look what happens to do you want to know why US Federal Reserve doesn't want to cut interest rates? Do you want to know why the market is not pumping? If you want to know, then you got to care about the TLT. This is why the market is not pumping. This is why the Federal Reserve is not cutting interest rates. Do you want interest rates to go to like 1%, 0%? Well, that they can't because of this chart. Let me just show you guys. Look, so basically, we start off with say this is 2014 TLT. If you buy that bond, it's probably like at par at 100. It goes up into a bull market of 142. You made 42% on your money. That's pretty good for a bank, because this is what banks buy, and this is what insurance companies buy. They can't take risks as much as a degen, right? Then it went up to almost as much as 180. So 80% just for parking your money in a US government bond. Oh, and by the way, you might think, oh, that's nothing. When you park the money in there, they give you like 3%, 2% yield interest just for parking that money. But look at this. All the banks got screwed. All the banks that parked their money inside the 20-year-old plus, 20 to 30-year-old US Treasury bonds, bought it in, this is March 2020, which means during COVID, they would have bought around 180, 170, 165, 170, 165. A lot of them, because the government printed a lot of money. And when the government printed a lot of money, what happened is a lot of that money went to banks. And when the banks get those money, what are they going to do? They're going to have to invest it in something. They can't lend it out to businesses because there's COVID going on. So they don't trust businesses. The only thing they trust not to go broke, right, that can repay them is US Treasury bonds. So remember how the US government printed something like $4 trillion, and something like $2.5 trillion ended up in the banks. And all they could do was buy and buy and buy those US government Treasury bonds. When they bought it, like we see, they bought at the top, man, 170, 165, and then US hiked interest rates like crazy to 5.5%, trying to crash China. That was their true objective. And yet, China didn't crash, but the US bond market certainly did, because when yields go up, bond prices come down. That's just mathematical. It's just a mathematical formula. There's nothing to argue about that. So basically, we saw bond prices go from like 180 down to, what is that? 82. Oh my God. 180 down to 82, right? That's like a 55, 60% drop. And we had 3 dips. This was like 87. This was like 84, 85. And even right now, we're at 91. 91 compared to 180, down 50%. Of course, we're going to assume a lot of the banks didn't buy at that level. A lot of the banks bought at 160, 170 level. So they're still down 40 to 45%. So here's the thing. That's why the Federal Reserve cannot cut interest rates right now. Because if they cut interest rates right now, all the money that's parked inside of US banks earning those 4% yields, 5% yields, they're just gonna go home. They're gonna be like, well, the only reason why I'm parking my money in billions in US banks is because they have 4% interest rate yields, 4.5%, 5.5%. It was a year ago. Now, half a year ago. Now, why don't I take my money back to Europe? Why don't I take my money back to Japan? Why don't I take my money back to China? The 3 big destinations. They're going to go back if US interest rates drop. So the Federal Reserve cannot afford to cut interest rates. Why? Because if they cut interest rates, we're talking about like $1 or $2 trillion going back to those countries or regions. And if they go back, then the banks need to pay out and give that money back to those depositors or investors. The US banks simply cannot give out $2 trillion at the moment. Why? Because when they took those $2 trillion, what did they invest it in? They invest that money into US government bonds. And I just showed you on this chart that US government bonds, since they invested, are now down something like, well, it was down like 55%, but now it's down like 45 to 40% to them. So what does that mean? That means if these banks, I don't care if it's Bank of America or Manhattan Bank, whatever you want to call it, if they sell those bonds to get cash back to repay the depositors, if they do that, then they're basically going to be, losing 40 cents on the dollar. If someone deposited $100 billion with them, they sell those bonds, they only have $60 billion or $55 billion back. How are they going to pay back all those European, Japanese, and Chinese investors? They can't. Then the Fed would need to bail them out. So that's why the Federal Reserve is not cutting interest rates right now, because if they cut interest rates really quickly and then US dollar drops, then basically everyone rushes in to take their money out and put it back into Europe, China, Japan, Saudi Arabia, wherever they came from. And if they do that, US banking system crashes. So that is why it doesn't matter how bad the recession or the economic GDP numbers look, the Federal Reserve simply isn't going to cut interest rates right now. That's why we just saw yesterday, instead of cutting interest rates, they decided to cut, to lower QT, right, from $25 billion to $5 billion for US Treasury bonds. Now, of course, mortgage bonds, they're still holding at $35 billion. But okay, now let's have a quick look at where Bitcoin and where if Bitcoin is headed. So if we here's a big clue on where Bitcoin could be headed. Do we see where this is NASDAQ ETF, where QQQ is? See this started from start of 2023, 2 years. This basically supported this entire bull run in the NASDAQ. We saw it break down, we saw a bottoming tail of sorts, and now it keeps on getting rejected at this trend line, right, which is 485 on the QQQ. Then I would think that's a retest to head a little bit lower for one more dip, right, in the short term. But ultimately, I think we probably get a big bounce or even a blow off top. So short term, next couple of weeks, I think we get a dip. And then longer term, let's say next few months, I think we get a blow off top. So if that was to happen, then what happens to Bitcoin? Bitcoin, I would think same thing. We get the short-term dip first, because my target for 73K area still hasn't been hit yet. And it may or may not be hit. We've already hit 86, right? So it was close enough. But 76K, so very close to my target. But however, I do think the probability of hitting a 73K is still open. So something like this, boom, by early April, we hit 73K, and that roughly around the area, and that's probably the bottom. We bounce along, and up we go for a blow off top. So that's my thoughts on the markets for now. If you are an Aussie, then Pablo uses SwiftX exchange, and I think it's a nice on ramp and off ramp. The link is in the description below, and thanks to everyone else for watching this video. Catch you next episode.